What's up, traders? It's Chris from Grindstone Trading here. I made a video last night on AMC and what I was seeing in those call options, and I wanted to make another video today exploring the same concept of looking for a bounce in a stock, but instead of playing the stock itself, playing one of its corresponding call options to increase your profitability. And showing multiple plays here and basically going through my scanners and what I'm looking for as the day goes on in terms of setups here. I've been filtering through plays all morning here just to sort of see how reliable my strategy is. Catching pullbacks on stocks, finding their corresponding options, and then riding them back up. And I've got piles of them here. I'm just pulling stocks at random and I'm seeing the pattern set up and play out. And I want to show you some of the indicators that I'm finding to be most reliable for this type of play. So I've divided my screen up into 4 sections here. In each section, basically from top to bottom here, we've got the charts, and with the charts, each one is corresponding to a different screener. And what these screeners are doing essentially is just showing me volume in the marketplace on optionable stocks. So what's happening here is this one is anything in the positives, sorted by volume. This one is anything in the negatives, sorted by volume. And I can just sort of click around as I go here. I've got to do a little bit of manual labor here to bring up a corresponding call option in here. But ultimately what I'm doing right now is I'm just picking at random stocks from either one of these charts here and then bringing them up over here to show you exactly how the stock price corresponds with a call option. So F-Cell, perfect example right off the bat here. So I'm just going to back this up right to the beginning of the day so you guys can see exactly the way that this day played out here. And I've brought up their $16 call option for March 19th here, which is about 20 days away here. But it still had enough volatility that it was more profitable to play over here than it was to play the stock. Watch this. Basically, the day opened here. I've got it set to my time zone. So I know stock market's open at 9:30, but it's 7:30 where I am. So this is actually market open. Market opens. Stock runs. Stock dips. You can't see it on the screen probably, but this is their previous close. I've got a little line on my screen showing it. So it's now in the negative. So it would have shown up on this list over here with some pretty good volume. So now, I would have jumped up and started looking at this going, okay, well, it's below VWAP, it's below 200 SMA on the 2-minute chart. I'm using the 2-minute chart here with a 20, a VWAP, and a 200. That's it. That's all I'm doing here. And watch how well this lines up. This is just so cool. It dipped, and it started to consolidate around 200, and then all of a sudden it broke above the 20. And now you can see the direction of the 20 starts to slowly curl here. You could have waited for the next candle for confirmation before that to really start flattening out. But let's just assume you bought it either 8.32 or 8.34. Now we jump over here. What's going on at 8.32 and 8.34? Well, we've got 8.32, 8.34, both of which the price is sort of languishing at about 2.40 for the $16 call options. Why did I choose the $16 call options? Because the price is bouncing right around 16, so I figured this one would have a lot of volatility. Sure enough, it does. Look at how this would have played out. If you could have got in here at 250 or sub, you could have rode this break, again, watching the underlying and not really paying too much attention to the indicators on here, but watching the indicators on the underlying, you could have bought this break here, and you could have rode it up all the way from 250 all the way up to as high as about 325 before it started to consolidate and turn around. Later in the day, I think it got even a little bit better, but that's not even super important right now. What's super important is that we could have made a very easy, profitable play on this one. And I'm just going to start clicking ones at random here and show you how this pattern ultimately sets up and plays out, and why the 2-minute chart with a 20 simple moving average is you can even get rid of the VWAP and get rid of the 200 here. Just the 20 moving average gives you such a good idea of the direction that a stock is moving in. So let's see how it played out for something else here. Let's jump over to, just pick one at random here, VISL, Vislink Technologies here. And we're going to bring this up on both charts. And because it's bouncing right around the $3, they've only got 250 and 5. Let's see what it did to their 5. Let's see what it did to their $5 call option. So here we've got Vislink on the day. Let's just see what it did right off the bat. Right off the bat, early morning, boom, shot right up. Bang, dropped right down. And then it started to consolidate and reverse. Again, you can never really call bottom. I mean, if I had a crystal ball and I could actually call out the bottom of some of these plays, like, my God, I'd be a cajillionaire. But it's not really a possible thing to do. I'm looking for confirmation of a reversal. And that confirmation, in my mind, 2-minute candles and a break of 20 simple moving average. Now, what did that do to the $5 call options for March 19th on the same one? Again, about 20 days away here. Well, right at this break of 20 SMA, 836, 838, if you wanted to wait for the big confirmation candle here, 838, let's call it. What was the price at 838 this morning, or yesterday morning? 838, you could have, it was bouncing around between 25 and 30 dollars per contract. So let's assume you could have got in at 30. Like, worst case scenario, you could have easily got in at 30 right here. And as the day progressed, you could have rode this all the way up to as high as 40 or 45. That's over, where is that? That's between about 35 and 50% on your money. Not a huge ton of volume in this particular one. Again, I'm just pulling these charts at random to show you these simple setups. But you can see how it worked. You can see how we got in on the break of the underlying, and once the call option started to respond to that, you can see how the percentage gain was so much bigger. You could have, where are we at here? It's only trading about 40, 50, or peaking out at about probably 20, 30 contracts at a time. But I mean, 20 contracts at $30 a contract, that's $600 worth of contract that you could have turned into like $800 or $900 by the end of the day. Very simple play. Just following the underlying and a corresponding option. So let's see if we can find something that's got a little bit more in the way of options. Let's use KMPH. We've been playing this one a lot recently. So let's use KMPH, and we're going to find a corresponding, I may have actually just viewed one. Yeah, let's use their $10 their $10 call. Why not? Let's use their $10 call and see how that lined up, because this one's been bouncing between about 9 and 10 for a while now, and they've only got 250 increments, so it's 750, 10, 1250, etc. So let's use the one that it's closest to. Let's use 10. And we'll use this exact same theory on the exact same day. Market opens 7:30, shoots up, breaks everything. Breaks 20, breaks VWAP, breaks 200, right all the way down. Of course, if you were a brain surgeon buying in here, you're a genius, absolutely. But we're looking for confirmation that the price is in fact reversing. So it's down at 840 a share here, and then it slowly starts to it pops up, and it starts. You could have even said that this is just too much of a kind of an elastic band stretch and actually bought in here, but let's assume you didn't. Let's assume you waited for confirmation of a reversal, and that confirmation happens right here when it breaks with authority both 200 and 20, and in theory this could mean that the chart is flattening out and going to reverse. So let's assume you bought at 838, and let's go to the corresponding call option here, which again we chose the $10 March 19th call just to see how it responds. At 838, you could have had this one easily, even for the next 10, 15, 20 minutes. You could have had this one at about, let's call this $1.60. I can't quite see an exact number on my chart here, but let's call this $1.60. You could have had this at. And look at what happens here. All of a sudden, starts to pick up, and by 10:50, so a little over 2 hours later, you would have been sitting on, where are we at here? $160 a contract to $250 a contract. You could have had as much as a $90 gain per contract on this one, just following it and holding it for a few hours, following this exact same underlying pattern of the reversal confirmation, 20 SMA break, and then just waiting for it to look bullish. And really, as long as this held, you could have held throughout this and sold on these pops very easily, and you had so many opportunities to get out later in the day. It would have been nearly impossible following this pattern, following the underlying, buying on the 20 SMA break after a morning dip, to lose money. Very difficult to lose money. Let's keep it going. Let's just pick one other one at random here and just see exactly what happened. SOS. This one was kind of languishing later in the day, but earlier on it was looking really, really good. Actually, I believe I played this. Yes, I totally played this one. I played this little run up here. And I can't remember which option I was using. I think it was the $5 one that was expiring, which doesn't really make a lot of sense because I can't view that one anymore. So let's use the $5 that's expiring on March the 5th, just to see how it lined up here. So basically, we've got market open 7:30, and it runs up. It's following 20 SMA here. It broke below 20 SMA, and then it rebroke above it at 8:34. So at 8:34, we could have had this exact call option for about $1. And then it rode up on that 20 SMA break and just kept bouncing off of 20 SMA all the way up to $1.75. So you could have 75% on your money very, very, very easily. And there's actually a lot more volume than this chart. The deceiving thing about options charts is there is actually a lot of volume. There was over 7,000 of these options traded during the day today. So I mean, even if you had bought, say, 20 here at $100, say $2,000 worth of them, you could have rode that up and ended up with nearly $4,000, about $3,500, and had every opportunity to sell for a profit along the way without it ever really looking bearish. I think it dipped to about 95, and that was about it. But the rest of the day on that 20 SMA break on the underlying, let me again just zoom this in and show you exactly what we were looking at here. Big pop, breaks back above 20. That's what we're playing. Underlying break, corresponding call option that's showing a lot of volatility, that's right near the price, playing the 2-minute candles, and beautiful strategy. Beautiful strategy. Everything I'm clicking on either of my lists here is showing the more or less exact same setup and pattern here. Let's see if we can. I'm determined here. We got to find one that doesn't work. Workhorse. Let's do Workhorse. We did actually play this one too during the day here. That actually brings up the chart at all. And it's bouncing around 16. So let's see what it did to the 16 March 5th call option here. So market opens at 7:30 again on my deal here. If you were quick, you could have bought this break here, but I typically don't buy things right out of the gate because there's so much volatility right at that. So you can see the volume peak right at 7:30. Everyone's just like, "Yay, Workhorse!" and then it crashes right down. What I would have been looking for is right around that same 8:30, 8:40, and this is typical. Like, I want to explain here. Like, you see this more often than not. Things have a lot of volume in the morning, and then it dies off, and they crash between about 8:30, 9:30 my time, or I guess trading time that would be between about 10:30 and 11:30. Things just die off, and that's typically when you can get things at your cheapest. So even though we're seeing the same pattern over and over and over here, guys, because of course I'm using the same day, and a lot of these stocks were in fact moving with the market, this isn't atypical. This is a very, very, very similar pattern to what you will see most every day. You can count on stocks to be roughly at their cheapest between sort of that the 10:30 to 11:30 trading time window, and then start to reverse throughout the day. And the easiest way to confirm a reversal, 2-minute chart, break of 20 SMA, and you can see it. This is the 20 SMA is sort of your directional indicator. You can see it. If you can imagine an arrow at the end of this from the beginning of the day, it's got a little pop, and then it's just a downward arrow. And it doesn't really become sort of a reversal confirmation until this starts to flatten out, and the price has broken it and is maintaining above it. So let's say it broke here, right about there, and actually started to show signs of maintaining above it at 8:38. And we're going to zoom in on their March 5th $16 call option and just randomly see at 8:38 what exactly was happening here. You could have bought at 8:38 at about $1.75, $1.80, and rode it up to about $2. So it still would have worked, not dramatically in this case, but it still works. I have yet to find one on either of my lists here where it didn't set up and it didn't actually become profitable. Ocugen. Let's just take a quick look at the Ocugen chart. I didn't look at this one at all. And let's bring up an Ocugen call option here. Let's see what they've got. Let's try the 10. That's probably what I would have been watching. Let's just, I don't even know what this is going to look like. I'm just going to click it and we'll see if this actually, oh yeah. Oh my God, that's beautiful. How on earth did I miss this? You can never catch everything, guys. You can never catch every single trade. So don't kick yourself, but just remember these setups and remember what I'm showing you here. 2-minute charts. You can ignore all these other indicators, just using the 20 SMA to follow the direction of the price. I like 50 when it comes to like daily chart reversals. I like 20 when it comes to short-term intraday trading charts. So let's just follow this along right from here's your pre-market, blah 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 blah. Market opens 7:30 my time, so that's what I've got my chart set to. Pops, breaks 20 SMA, down 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 till about 8:36, 8:38. 8:36, 8:38. All of a sudden it busts 20 SMA and it starts to hold above it. So let's say you were waiting for a couple of confirmation candles. You waited till 8:42 to buy this one as sort of a confirmation that it's holding above 20 SMA after it broke. Maybe it's going to start looking bullish. And let's just take a look at what actually happened here at 8. What did we decide on? 8:42? 8:42. You could have had $10 call options on this stock for about $1.75 a piece. And once that broke, it started to look extremely bullish. 175 up to about $2, and it held. It continued to hold. And then, of course, what happened is it started to look insanely bullish. And you could have easily doubled your money, obviously, if you had sold at the peak of the day, which is insanely hard to do. But what I'm saying is playing this pattern, following the underline, buying the 20 break, and riding the bullishness up, it gave every single opportunity to sell at a profit. Like this pattern is very high percentage win. So UAVs. Let's do UAVs. So we're going to do the same thing. We're going to find a corresponding call option here. It was bouncing around 8. So let's see what it did to their March 19th. Maybe the 10. Let's just see what it did to the 10 just for funsies. So let's say you followed it down. It collapsed. And then it rebroke at about same time as most everything else we're looking at today, 8:30 to 8:40. Let's say you bought it about 8:36, 8:38. 8:36, 8:38 is right about here, about 95 cents per. It still worked. You still had profit right from the get-go. So the long and the short of it is, if you're using this scalping technique and you're basically just watching things for dips, and then reversals, and the confirmation of that reversal being the break of 20 SMA on a 2-minute chart, and then it holding above that, you can very easily play the corresponding call option, something getting a lot of volume, something where the strike price is right around the actual price of the stock, and play that reversal instead of the underlying reversal, and boost your percentage gains. It's a beautiful setup, guys. And I highly recommend that you consider this trading technique. I'll be calling them out in the group all the time, but I'm basically just showing you what I'm watching, what I'm seeing, and how I'm finding these plays. I think we're 7 for 7 or 8 for 8 over the last 2 trading days of plays exactly like this that I've called out here, and fingers crossed we can keep that winning percentage up. So that's the gist of what I'm looking for in terms of option scalping right now. As I mentioned a few days ago, what I've done is I've completely cashed out my portfolio, and I'm just playing cash until these markets are a little bit more stable. I'm very much have lost faith in the swing trade market. We were calling out 100% runners like crazy in December, January, early February. I think we had 300 or 400% runners that we called out on our swing trading. But now with the markets pulling back and everything being really choppy, it's not as reliable. So what I'm doing instead is just simple options scalping. In order to keep my portfolio green and not to have exposure overnight for holds. So it's a very reliable system that I'm working on here, guys. You can see the percentage that we're showing just by pulling charts at random off of my scanners here. You can see how reliable the pattern is. And again, that pattern is 2-minute charts, 20 SMA, and looking for basically dips followed by consolidating reversals where the prices re-breaks 20 SMA and then starts to sort of bounce back the other way. That's essentially what I'm looking for. But instead of playing the stock itself, I'm playing the corresponding option so that I can boost my percentage gains. Instead of playing a little 5-10% move back up, I'm playing a 20, 30, 40, 50% move back up. Good luck trading, guys. I hope you're enjoying your weekend, and I hope you get something out of this video, and best of luck.